There's a very popular saying among the OG Bitcoin investors, and that's when in doubt, zoom out. Let's do exactly that in this video. Let's have a look at the long-term on-chain data. Let's see where the price might currently go, potentially in the lower end and also in the upper end. Let's try to find out at what price point Bitcoin becomes cheap. Let's try to also find out at what point it might make sense to sell. Let's have a look at all of this using different mathematical models. And to start it all off, let's have a look at why it makes sense to hold Bitcoin long term in the first place. What we've got over here is the Bitcoin hodl waves, and we are looking at the percent of Bitcoin that hasn't moved for at least 5 years. And this tends to increase quite steadily over time. What does this mean? It means that less and less Bitcoin over time is in the hands of short-term speculators. More and more Bitcoin is just held by diamond hands, by people that tend to not move their Bitcoin, that tend to hold over the cycles, so longer than 5 years. Now there's an interesting effect here. Once we add the wallets that hold for 3 to 5 years, we actually do see some cyclicality in this. So for the wallets that haven't held for 5 years, this continues to go up pretty steadily. So Bitcoin becomes tighter and tighter in supply. The price should go up independent of fiat inflation. But once we add the 3-year mark to this as well, we do see how this sometimes goes down. In other words, when there is a massive bull run, when Bitcoin hits higher and higher highs, then we see how the long-term holders tend to sell. So there is a cohort that's riding the wave, but there's also an ever-increasing cohort that simply just doesn't move their Bitcoin. And so in this regard, the supply dynamics around Bitcoin are way more favorable to any other asset. When the price goes up, say for different companies, right, then more companies will be founded. When the price goes up for gold, then more gold mines will be founded. When the price goes up for Bitcoin though, there isn't more Bitcoin. Bitcoin supply is fixed. And there's an ever-growing fraction of Bitcoin holders that simply just save in Bitcoin, that simply just allocate to Bitcoin, and that don't even worry about 70% drops. Because this is what tends to happen, right? In a bear market, the Bitcoin price can easily drop by 70 to 80%. Now here's another reason to be into Bitcoin long term. The number of addresses that hold more than one Bitcoin tend to grow over time, but again, this is a multi-year trend. If we just zoom into the recent past, then we actually have not seen any growth since August of last year. So that's now for almost an entire year of no growth. But again, when in doubt, zoom out, Bitcoin adoption tends to grow. We see something very similar for the number of addresses with 0.1 Bitcoin. It tends to grow a bit smoother, but here again, since beginning of the year, we haven't seen any net growth of the number of those addresses. And so that's the difference between short-term speculation, trying to find the tops and bottoms, and long-term investing. When we invest into the long term, we don't have to necessarily figure out where the tops and bottoms are. We're just betting on this to continue to go up and this continue to go up. And of course, potentially also this going up. This is the hash rate, as in how much computing power is there out there to secure the Bitcoin network. This tends to rise over time, even though the Bitcoin miner revenue gets cut in half every 4 years. Not everything is growing. For example, the Lightning network does not see more adoption. The number of Lightning nodes has not grown in the last 3 years. The Lightning capacity measured in Bitcoin also hasn't grown in the last 2 years, roughly. So really, Bitcoin is a savings vehicle now. It's a vehicle to escape fiat inflation. It's not another payment network that you use to buy coffee with. If you need liquid money, if you need to spend on services and products, you're still going to use fiat. But if you want to protect yourself against the long-term devaluation of the US dollar, you don't just have the option to buy stocks and property. You can now also diversify with Bitcoin and still beat monetary inflation. This needs to go to 1 million, or March buyers now will make millions. This is how you get the clicks on YouTube, but this is not how you beat the market. To beat the market in crypto, you need to be better informed than the rest. You need to be better skilled than the rest. You need to do better blockchain analytics. You need to track other people's wallets and know what is the smart money doing. It's the boring educational content that forms skill that doesn't perform so well on YouTube though. That's why I created the premium membership. Feel free to check it out. We are tracking influencer wallets to find out what they are buying before promoting promoting this on YouTube. We've got a lot of tutorials to help with on-chain analytics, to help with wallet discovery. And of course, there are also plenty of chats where we help each other and also one-on-one conversations with me. So I'm messaging every premium member one-on-one directly. Once you're joining, you will get a message from me and you have the opportunity to directly pick my brain. Feel free to check it out, thebitcointrader.com, link is down below. Now let's try to find out where we are in the grand scheme of things. Is the current price high or low or average? At what kind of point would Bitcoin actually be considered very cheap? There's a ton of models here. Let's have a look at several of them. We have, for example, the 200-week moving average. That's over here in purple. And in gray, we've got the Bitcoin price. And there aren't too many instances where the price is below that moving average. The moving average tends to grow over time. Whenever the price is very close to that moving average, we tend to have very nice prices. We can also color code this. Whenever this is red, we tend to be very high on the price. So that's then when it might make sense to sell. But let's look at the bottom again. Where is this bottom right now? It's at $35,000. Let's have a look at an on-chain metric that uses the value days destroyed. So the average cost basis of the market. Let's zoom in. We've got some standard deviations here to account for the fluctuations. It did hit the tops and the bottoms quite well, especially the bottoms. The bottom currently on this model is at $23,000. The top, by the way, is at $150,000. Here's another model, again using the value days destroyed, but also for the top using the terminal price. Here the bottom is at $23,000. The top is also at $150,000. Now there's many different approaches to this game, right? You could either decide to simply just hold Bitcoin over the cycles, be part of the people that hold Bitcoin for more than 5 years, just allocate to Bitcoin to the same way you allocate to stocks and to gold and to property. Or alternatively, you can try to ride those waves, which obviously comes to a risk, but potentially also comes with some more return. Because again, Bitcoin can crash by 70-80% in a bear market. And so realistically, below 30K seems to be very, very cheap. Potentially we might see 25K. The upper end seems to be 150K. There are, of course, models that speculate with even higher tops, but I'm not really a fan of those if you want to time the market, because you don't want to be the last person selling. The risk to potential reward isn't that great anymore when Bitcoin is already at, say, 150K. But still, I want to share those models just for completeness sake. There is, for example, the stock to flow model. It looks at how rare is Bitcoin getting based on the halving cycle. And with every halving, we tend to go up in the Bitcoin price by roughly 10x. It's a model that's solely based on supply, not on demand whatsoever. And at some point this will of course break. We can't 10x every 4 years forever, but it would give us a fair price of Bitcoin in a year of almost $500,000 US. There's another interesting model. This is a logarithmic regression, the Bitcoin rainbow chart. It looks very nicely at the potential bottoms of Bitcoin. It does also try to time the tops. It doesn't do as great of a job with that though, right? In the recent 2021 top, we didn't hit the upper ceiling. If we are hyper optimistic and we think that the upper ceiling could be reached again, then based on that model, we would see $700,000 or so per Bitcoin in the next year. Again, I doubt that those kind of price levels will be hit. It's better to be too pessimistic than too optimistic. But of course, nobody knows, and that's why you shouldn't be too deterministic about allocation, right? If we are already at 150K per Bitcoin, it doesn't make sense to sell all of the Bitcoin just in case, but it does make sense to have somewhat of a lower allocation relative to other asset classes if you think the risk versus reward isn't really adding up anymore. So we are pretty much in no man's land now if we believe those on-chain metrics. We are not super cheap, we are not super expensive. I like to not buy too much because I've already bought quite a lot in the past. I've dollar cost averaged in a lot. My exposure to crypto and to Bitcoin is comparatively high, and I do want to have a balanced portfolio, and I do want to also own quite a bit of long-term government bonds and quite a bit of stocks, that in case we do see a Bitcoin crash, that I can take advantage of that dip and buy low. If you found this useful, feel free to share this with your friends. Feel free to also give this a like. It helps the channel grow. And of course, if it's your first time here, feel free to subscribe as well. I publish videos regularly. In case you've got Telegram, then feel free to join us over there. There's a link down below. Looking forward to chatting with you. Cheers.